Now let's look at the asset side of a typical corporate balance sheet. Now, there are types of assets, as I say, set out on the balance sheet. Assets are grouped into types, but those types themselves are grouped into two particular classes. On the one hand, one of the classes is termed current assets, and the second class is termed fixed assets. And current assets and fixed assets are the exhaustive assets in a particular on a particular balance sheet, and to that extent, current assets and fixed assets aggregated gives us the total assets on the balance sheet. Now let's take a look in a little more detail at what current assets happen to be. Well, the distinction between current assets and fixed assets is based upon a very intuitive distinction. And let's consider, for example, a business such as a restaurant business. Now, the assets in a restaurant business will be various. They will include, for example, real estate premises. They'll include tables and chairs and cutlery and so on. They'll include kitchen equipment. It will include cash in the till and cash balances at banks at any point in time. And it will include all of the foodstuffs, the ingredients that go into the dishes that the restaurant prepares, the stuff in the refrigerator, in the wine racks, and so on and so forth. Now let's reflect on some of those assets for just a second. On the one hand, things like premises, tables and chairs, cutlery, kitchen equipment don't circulate through the business. That is to say, they are fixed assets in a pretty obvious sense. Hopefully they don't walk out of the door, not that frequently in any case. On the other hand, things like food ingredients, cash, do day to day in the normal course of business as this restaurant operates, circulate through the business. Ingredients will come in, they'll go into the refrigerator, they'll be dragged out as various dishes are prepared, and they'll end up being digested by hopefully happy customers who subsequently walk out of the door, and then for the next day more ingredients will be acquired. These are things that in the normal course of things pass through the business, and they are what we term, those sorts of things are termed current assets. Now, in the same way that foodstuff circulates, food ingredients circulate through a restaurant business, so does cash. Cash comes in from the customers as they pay their bills, goes into the till, it goes into a bank account, out from the various bank accounts go payments to food suppliers, utilities suppliers, and so on and so forth. Cash too circulates. So cash is one of the types under this broader class of current assets. Now there is something else that doesn't apply so much in the case of restaurant businesses, but in the case of major manufacturing businesses, for example, there is a type of assets which we term receivables. Now, in the case of a manufacturing company, when that manufacturer produces goods, it ships them to customers, and it typically does so. It typically supplies its customers on what we call terms. That is to say, it ships goods to customers, and it requires payment in respect to those goods from the customers at some later date, perhaps 30 days later, or whatever the case may be, 30-day terms, for example. During that 30 days between the date on which the goods are shipped to the customer and the date on which the customer pays for them, there is an outstanding amount which is receivable from the customer. The customer owes the company. And what it owes we term a receivable, and the aggregate of all of these amounts, all of these receivable amounts appear on a balance sheet under the heading receivables. There's another class of assets, another type that appears under this broad class of current assets, which is stocks and work in progress and inventories of finished goods. Stocks are raw materials. Raw materials, in the case again of a manufacturing company, for example, raw materials will come in, they'll be put on shelves in the warehouse, they will have a value at any particular point in time at a balance sheet date. Some of those at any particular point in time will already have been pulled from the shelves and embarked upon the production process. They'll be part way through the manufacturing process. That we term the value of those things, we term work in progress. And then at any point in time at a balance sheet date, there will be items which are finished and awaiting shipment to customers, and those will be inventories of finished goods, and they will have a value. Again, all of these things passing through the business, en route through the business and out to customers. Current assets.